But a big CPI report today should not scare you. It should not, you shouldn't be trying to guess what's going to happen here. You're treating it absolutely like a gambling game in a casino, and you're going to lose your money over time. The reason I say that is because if a big news event scares you, your position sizing is way too big. You're treating it like a gamble. What we do here on this show, on these streams where we react to big numbers like this, is we interpret them and we trade the aftermath. We don't go gambling right ahead. I'm not over here. You're not going to see me ever on these streams taking a giant position on gold with minutes to go before a CPI report, fingers crossed, one eye open, one eye closed, hoping that I get the direction right, because that doesn't build sustainable trading. That will make it so that a year from now, you're no longer trading and you're like, I lost a bunch of money doing that. That's a scam. That's how those people get born. Don't be one of them. If you want to trade the markets profitably over the long term, these sorts of events can't kill you or make you, right? They have to be treated with responsibility. So how do we do that? Well, we look at what the number actually tells us. If you get an inflation report that's really cool today, and the Fed might get the excuse to actually start cutting rates more next year, and we might see over the next few days, weeks, or even months, perhaps a gold bullish trend start to form off of cooling inflation data. Like we have, by the way, for the last year or so. Inflation has been cooling, not just in the US, but we can look at this data. We can understand this. Let's actually apply some logic to this rather than just, what 95% of traders do, which is just trade the spike and call it, sort of a roulette game, right? We're not doing that here. What we do here is we look at what this data is actually telling us. Inflation's falling in the United States. Is that trend going to be disrupted today by perhaps rising inflation, or are we going to see more of the same? More of the same, by the way, means that the trends that have been in place for things like gold, right, could continue. So we look at that and we say, okay, if inflation is hospitable today, if inflation is cooling off and not giving us a big problem, then this gold bullish signal that we have on the Edge Finder, inflation readings are probably going to remain relatively comfortable. But if we get something that changes up the story, higher than expected inflation, that changes the story for gold. Are we on the same page? Again, a lot of times we get people in the comment section. You're going to see them right now. There's people who's gold buys or NASDAQ sells or whatever. Nobody knows what's going to happen in the CPI report. And those comments that you're going to see on social media are going to get you into a lot of trouble because nobody knows what's going to happen. Nobody knows what the inflation statistic is going to be perfectly ahead of time. What we can do as traders, however, is we can trade the momentum or the story that unfolds once those numbers start to come out. And I'm not scalping that number. I'm looking at possible swing trades. I'm looking at possibly intraday trades, although that's not really something I do too much. But certainly there's a lot of people who do use CPI reports on an intraday level, but they're trading responsibly and managing the risk. Going into this print, I am bullish on indices. I'd like to see a bigger pullback. If you get a hotter than expected print on inflation, it could disrupt the party a little bit for indices and possibly give us those pullbacks that I'm looking for. I am bullish on the NASDAQ, although waiting for pullbacks. I've got to see, a healthy correction on this before I can really jump in to possibly dip my feet into some long trades. I also do think that I would not be surprised if I take a long trade and it doesn't work out, we start making that bigger push down. We could see a larger scale pullback on the NASDAQ and still be bullish overall, right? Again, you're going to see comments and stuff, people, who are saying full margin, trade this thing. I'm telling you, if you want to be here a year from now, if you plan on being here a year from now and you want to trade responsibly, this is the stream for you. If you want to gamble your way through a news event and blow your account, inevitably doing so at some point or another, and not be trading in a year from now, do your thing. I'm not here to tell you what to do. You do what you want to do. You're hopefully an adult. If you're not, you shouldn't be doing this at all. But again, this stream is really meant to be for people who are serious about this stuff, who actually want to dive into the fundamental analysis and understand what these inflation reports tell us so that we can build a more insightful look at what the markets may do next overall, not trying to gamble the intraday 1 minute chart. So again, we're all adults here. You do what you want to do. But my opinion, be really, really careful trying to gamble on a news event. It inevitably will blow your account. If you think you're smart, you're not. Everybody thinks they're the one when it comes to this stuff until they blow their account. So I'm telling you, there's a lot of people who probably have experienced that in their trading career, thinking they're able to trade spikes and make a bunch of money. But wouldn't it be nice if the world was that easy, right? Trading is difficult. It really, really is. Take a look at gold. Big resistance up here around 27.15. What I'm looking for here at this level of resistance would be a key breakout. If you get inflation numbers that are cool today, that could help the story. It actually could get us above here, and I look for longs above 27.20. So we'll see.
Shopping for presents this holiday season can be stressful. What to get for mom? What to get for dad, grandma, your uncle? It's all just too much. Lucky for you, A1 Trading has the perfect product for everyone on your list. Introducing the A1 Stock Box. Let mom keep up with all her favorite brands like Lululemon. Dad can keep up with his reading by checking out the latest headlines. And everyone knows grandma loves hedge funds. She can keep up with what her favorite hedge funds are buying and selling each quarter, and even see what percentage of their portfolios are diverted into what stocks. There's something for everyone in the A1 Stock Box, available now at a1trading.com.
Bitcoin also would benefit, by the way, from cool inflation figures. Inflation cooling helps the consumer, and Bitcoin is a big consumer story. In my perspective, in my view, when people have a little extra money in their pockets, they like Bitcoin. By the way, we've got just about 30 seconds to go, guys. I'm going to go ahead and switch over so that we can watch all these different charts at the same time. I've got our all markets view. We've got metals here, etc. Stocks on the left. You got the dollar index in the middle here. Oil on the bottom right. So we'll go ahead and roll our breaking news coming in soon. All right. About 10 seconds to go here. We'll see what the CPI report does based on the statistic. All right. And Russell is higher here. Dollar index lower. Gold mixed, hasn't really made a big move just yet. Stocks trying to move higher here, it seems. Let's take a look at the number. 2.7 is what people are saying in the chat. Let's see if that is correct. Again, stocks slightly higher here so far. But if it is in fact, yep, so people are saying 2.7. 2.7, so again, came in exactly, look at that. All three numbers came in exactly as expected. So what does that tell you about market expected moves? Probably not tremendous moves one way or the other. And that seems to be the case right now. These are not big moves. S&P 500 moved up 10 points. NASDAQ also just a small move higher. Russell slightly move higher. Dollar index coming down here a little bit, but nothing significant, guys. That is sort of, as we explained here earlier in the show, the idea. When you get a number that comes in as expected, it is not going to surprise the market, shock the market, and create as big of a move. Seems to be the case today with NASDAQ up 0.25%, nothing tremendous there. Silver and gold pretty much flat since the move. Dollar index unchanged as well. But let's take a look at what this number actually tells us. What does this do for us in terms of a macro scenario? Well, for that, I want to take a quick look at the yields world to see if that changed anything. So the 2-year yield pretty much remains unchanged, 10-year as well. So the point is, basically, yields are flat off of that response. Why am I looking at yields? Well, that tells us what the bond market thinks the Fed might do next. Yes, this is very true. Watch the viewers drop. That is inevitably what happens when you get, post spike, we see the viewers start to trail off, which is understandable. There's people who, are interested in just the volatility, and then they move on with their day. But for those of us who actually want to understand, take a look at this number and understand it, stick around, and I'll do my best to explain it. Okay, so 2.7%, that's a tick up in inflation from where we were previously. So inflation is still on the rise, with a 2.6 previous, 2.7 this time. At least for now, it seems like inflation, has found a bottom in October's report at 2.4%. We're up to 2.7, so we have made a bottoming formation, at least for now, on the inflation statistic. The market's not too phased by it because you're still seeing, overall a really strong U.S. economy. And so, a little bit of inflation is okay if you still got decent jobs report numbers, which last NFP that we saw, we take a look at NFP in regards to this. We got a good NFP report. Unemployment rate did tick a little bit higher, so there's a little bit of a mixed response there. But overall, the point is the party's been going on, right? You've been seeing when you look at stocks, when you look at Bitcoin, there's been a party going on. The party, I don't think, is disrupted by the number that you saw today. The only thing that would have really disrupted, in my view, this party, quote unquote, would have been like a 2.8, 2.9% CPI report. That would have spooked the market a little bit. But barring we don't have something different, like a Middle Eastern conflict flare up or something new that comes to the market, I think that this number just kind of appeases investors. And for now, the party can go on. I mean, that's been the case for quite some time here, as we've just had, one party after the next. That being said, I personally am a little bit cautious with where prices are when it comes to the S&P 500, the NASDAQ. These things are really, really bulled up right now. So for me, I am bullish as well, although I want to be a little bit more cautious up in these levels and wait for pullbacks to see if I can get them.
Euro Canadian dollar. Yeah, I like this. Well, I did like this for a buy. Again, I was waiting for an M15 structure break, right? So if we look at the day chart, right, what's not to like? Okay, we was in this downtrend, and now we're in an uptrend, right? Higher lows, higher highs, we're in an uptrend. And it's broken this level of support and resistance through here, right? Clearly broke it with this candle. And it's now broke that level and retraced to it. Okay, so this is a really nice area for buys. Okay, potentially all the way back up to this 5/100 psychological level. Right now, the thing with it is, right, and also worth pointing out the candles, guys. Yeah, look at these candlesticks. Look at the wicks on these candlesticks. Right, there's some buying pressure in there. And if we drop down to the H4, right, you can see, yeah, we're bouncing off of this level, okay? Structurally, we are against the H4 trend, right? We would need to see a break of this level through here. But I'm still willing to take trades in here. So what I was looking for, guys, was a M15 structure break, which is what we've had, right? As soon as we break, you can see all this price action here. As soon as we break out of this level, right, I'm interested in this trade. But there's two things. Obviously, this candle is super volatile, right? Where does that come from? Yeah, we haven't even had the CAD news later, right? So I'm not willing to trade a candle that has a top wick like that. Okay, so I would stay out of this particular M15 structure break that we've just seen. Right, so I can't help but think the market is waiting for this, right? So in an hour's time, guys, we've got the BOC interest rate decision. All right, so I like EuroCAD buys, but I'm not going to jump into a trade, an hour or so before, CAD interest rate decisions coming out, although I do want to buy Euro Canadian dollar. So I'll wait for the news to come out, like the interest rate, let the dust settle, and then see if I still have a trade or not. all right? Because, you know, let's be honest, most of the time the interest rate is as expected, but it's whatever's said in the statement, right, that can have a big impact. So yeah, guys, they're the two trades that I'm looking at. I was looking at gold buys earlier, but I actually missed this trade. I was down the gym pumping iron like Arnold Schwarzenegger. Not like him, more like Bambi. But yeah, missed the gold trade. Gold was a beautiful entry, right? Really was. Yeah, on the day chart. Yeah, again, we had a break of this consolidation in here, right, on the day chart. We was in an uptrend, and then price just came down and didn't know what to do with itself. And then bang, yesterday we got a nice big bullish candle, right, break out of this level. And, you know, everything in my being is saying we can take price back up to these highs, right, if not higher. Okay. And when I say everything in my being, I mean everything that the chart is telling me, right? The facts of the chart, right? We're in an uptrend. We've broken out of consolidation. We have a nice bullish candle. We're above the moving average 20, which is what I like to see. And we've got room to move into, right? Lots of reasons to like gold buys. But it was one of those, you know, blink and you miss it. And I literally was down the gym, right? So look at this level here, right? Once we get this H4 structure, when it breaks, you know, we all know this is a beautiful setup, right? What was once resistance, when it breaks, it becomes nice support. And it literally touched that level to the pip and just bounced off, right? And then by the time I put down my 100 kilogram dumbbell with one arm, I'm joking, price was up here and there's no value, right? So I've left gold alone, right? You know, if it came back down to here, I'd be interested, but it didn't, right? I missed this trade. Right, what else are we looking at? So, right, we've got someone here. So a couple of people are asking about Aussie dollar, US dollar. Okay. So we've got Jules and we've got Narimet. I'm sure I've pronounced that beautifully. So let's take a look at Aussie dollar, US dollar. Okay. And as always, guys, I'm just going to do a top-down approach, right? Now, this is what we're going to do. Right. And guys, please remember, if you enjoy my analysis and want to receive my analysis every day, please don't forget to come join our channel, Simply Forex. So weekly chart, right? As with a lot of US dollar major pairs and the dollar index, we are all at a very important weekly level, right? Fact, right? The market has shown us this is a really important level. Okay, and we are there right now with Aussie dollar, US dollar. Okay, we're in a weekly downtrend, right? We know the dollar's been super strong, but I cannot sell into that support. I just cannot do it, right? You know, don't buy into resistance, don't sell into support as a general rule, right? So straight away, I know that I cannot sell Aussie dollar, US dollar. So sells are off the table, right? I'm not looking at sells. And then basically I've got two other options. Will I buy it or will I stay out of the market? So let's carry on a little bit further and do a bit more analysis. So I don't want to sell that, right? Now, if we drop down to the day chart, right, you know, we're in a downtrend, right? We had a bit of a range here, but we are really, you know, this is what we're looking at, right? We're in a downtrend. We're getting lower highs, lower lows, right? We're in a downtrend below the moving average 20. Everything's pointing to sells. But again, I cannot sell into that support, right? I would rather chop my little finger off than sell into that support. So what do I need to see before I can take a trade. Because I know this is such a nice weekly level, right? I would be looking for a break in daily structure, right? Something like this. Perhaps we get a bit of, sideways movement, which normally happens when we're at a weekly support and a daily downtrend, right? And then we get a break of daily structure, something like this. Then I would be very much interested in buying Australian dollar, US dollar, right? But that's the only scenario I'm looking at the moment. Okay. And obviously, you're probably thinking, Tom, that could take absolutely days or weeks to play out. And yes, it could. Right. And I will wait patiently, like a coiled cobra. Right. And wait for my opportunity. And this is not it. So that's what I would want to see for a buy, a break of daily structure. If we got a weekly break, it would have to be a weekly break, not a daily break. If this candle ended up finishing like this, right, and it was a bearish candle, right, like this, then okay, I think we have a little bit more room down to this, around this 63000 level. Okay, and I would take it, rebound, take it lower. But only if that happens, and I would need a weekly break. So for me to start looking at Aussie dollar, US dollar, those are the two scenarios I would need to see happen.
The reason we saw the yen is because we had some news out of the BOJ. So what the BOJ said was actually quite, well, I'd view it as overall positive, but it's not positive really for an immediate position. So the BOJ said there is little cost to waiting for a rate hike. So that tells me that they're not really in a rush. So the December rate hike is now roughly 40 to 60. So 40% chance of hold, 60% chance of a hike. The BOJ officials are not against a rate hike in December if it's proposed. Bank of Japan said there's little cost to waiting. Bank of Japan officials see the next hike as a matter of time. So that's good. BOJ officials see less risk of a weak yen pushing up inflation. So it's a good sign. It's they are looking to hike, but the downside really is that they're not in an immediate rush, which is what caused the large move on the yen this morning. So again, it wasn't any crazy stuff. Just pay attention to what's actually moving the markets and it'll be very clear. So my standpoint on the yen as we go forwards into 2025 is still bullish. I'm still looking for higher prices. It's just a matter of time. So I wouldn't start going long on the yen now. And it's not because I don't think it's going to be bullish. It's, if it turns bullish right now, completely fine. No issues with that. It's more just, I don't want to, mainly because we've obviously got the Christmas period coming and it's still not 100% clear if they are going to hike or not. And if they don't hike, I would see some more bearish movement, or I would expect to see some more bearish movements on the yen. So that's about it, really. My point stands on the yen. So mainly euro yen. Actually, I was very, very short. I was really over leveraged, actually, to be quite honest with you. I'm going to make a YouTube video about that. Let me just find the screenshot for you. Give me 1 second. Here. Let me try and sort this out here. So here you can see I had 1.5 lots, 1 lot, 0.55, 0.55, 0.4, 0.4, 0.4. So I was very, very exposed to the yen, and it was really going against me for quite some time. And it got to the point where I was like, I need to either get out or I need to manage it severely. So essentially what I did, I was realized some of the loss. And then this morning, I'm going to say luckily, because I'll be honest, it was luck. I didn't plan for the BOJ to come out and say what they said. I managed to get out at relatively break even on the bottom of this wick when I woke up. So I woke up to a trading view alert. So that was very fortunate. It saved me being a little bit stressed today, although obviously we're seeing a correction now anyway. But yeah, I think euro yen still has a lot of room to the downside. It was more just a case of me wanting to get out of a very overly exposed position. Hi James, a few weeks ago GBP was weak, but now is strong among other currencies. What's making it strong? Let me actually change this to there. So let's have a look. GBP, let's see. The British pound is positioned to remain strong in 2025, supported by a combination of fiscal-driven growth, relatively higher yields, and political stability. Although risks remain, particularly around global trade dynamics and potential growth shortfalls, the currency's safe haven appeal and supportive domestic fundamentals should help it outperform many G10 peers. GBP USD is forecasted to rise towards 1.3 by the end of the year, with the currency benefiting from both domestic resilience and narrowing policy divergence with the US. So there you go. I find it a bit easier to read off the sheet sometimes, especially when it's a currency that I'm not really trading at the moment. But yeah, I've got no active positions at all at the moment. Managed to reach my target of closing trades. I took a minor loss actually this month, so I'll show you that. I like to be as transparent as I can. So yeah, this is my FX book. So you can see the drawdown on the euro yen position I was talking about reached, obviously relative to the account balance, was quite drastic. It was a total of around 8% drawdown, which is way past my my criteria. So that's that. I was up, I think it was around 4.5% this month. So I took a 2% loss, a 4% loss in total on some of my trades this month. But it was mainly due to me just being impatient and closing because I was saying I wanted to get out of all my positions before Christmas. Don't want to go into the holidays with a full portfolio. So I was more than happy to take that trade in terms of losing some of my percentage gain for peace of mind. So that's completely fine with me. There's no issues there. But yeah, other than that, I'm done for the year. Although, still done very, very well over the past quarter and since September, really. So, no problem. Ian, hello. Bossy, hello. Wonga. Grids, good stuff. Agora. Good to see you all. Marcus says, Euro Yen shorts, oof, with a Chinese face. Yeah, I think Euro Yen shorts are still in play. If it wasn't the Christmas period, I'd probably stay in that position. The Eurozone data, I've been saying this for quite a while now, sound like a broken record, but the Euro just doesn't have anything that makes me want to buy it. The only situation that I could really see that's realistic right now is if we did see a ceasefire between Ukraine and Russia. But that's not really on the table at the moment. So Trump proposed that and said that he would implement it. However, Ukraine came back and said that they're not really very happy with that situation, because the way that would work is Russia would essentially keep whatever they've taken already. So all of the territory that Russia has invaded, they would just get to keep. And obviously then Ukraine loses it. So Ukraine isn't very happy with that. So I don't really see a ceasefire that's a possible outcome right now. So yeah, again, Euro kind of in the bin. This is my first year ever trading. I'm at a loss, but I'll recover almost at break even. Laura, if you're break even in your first year of trading, that is a great achievement. It takes most people at least 2 years to just be break even. And Laura, what you can say is if you're break even, you've outperformed 90% of the trading guru space, because most of them lose money anyway. So round of applause to you. What do you think of dollar Swiss? Let's have a look. It's kind of just range bound, isn't it? So H1, H4. I suppose this weekly level looks quite good to go for a long position here. Let's see. Not quite a fib level. It's not primed for my strategy to go long. I think the US dollar definitely has more room to continue running. So I'd really be looking to go long at some point. There's no entry points here for me. So it'd be more a case of just waiting. I'd wait for a retest on this support level if that does come. Although we may have missed it because that has already happened. But yeah, I'd be looking for a full move back up to these previous highs around here. I need to unclick this magnet. It's so annoying. Yeah, somewhere around there I think would be a great take profit level. Similar thing actually with the dollar Canadian, or the US dollar Canadian dollar. I'm looking to go long here. We're expecting weaker oil prices. So the OPEC Plus has extended their supply cuts into 2025 or further in, I think it's April. So it's not really, well, that is actually supportive for oil, but the markets aren't really reflecting that. So Marcus is not a Chinese face. Come on, Marcus, I'm joking. Just relax. So yeah, I think the Canadian dollar isn't really primed for any long positions. So if anything, I'd be more looking to short the Canadian dollar. I think the US dollar, again, has a lot of steam left in it. So I'm looking for some sort of pullback here, possibly off the current resistance level, if we can see that. And I'd be taking it 50% into the way of the previous highs up here. So if we draw our fib, now this isn't like a really strong rule, it's something I like to do sometimes, especially in this sort of wide gap where we may not get to the top. I'm happy to take it 50% of the way. So the way to do that, I just draw a fib, put this 0.5 level in, and that's 50% of this resistance.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.